I think the market is still on this high of, okay, the Fed's not going to hike, the shrinkage of the balance sheet is ending at the end of the year, and there'll be a trade deal. Because if you take all the data in the aggregate, it's showing a clear slowing, and not just here, but overseas. And I can't ignore a 10-year yield that's only at 261 in the face of these rising stocks.
But I wonder how much of that, Kenny, I mean, you tell me, but is because of what's happening in Europe and German bond yields being almost negative, and our wage number was okay, and some of the other trends look pretty
I actually think the news is a little softer in the rest of the world. I think the news here in the United States continues to be at least stable to a little bit robust, right? But I do think that the market realizes that if there's going to be any rate hike at all, it's going to be just one this year. They're going to take 2 and 3 off the table.
What's priced in right now? Do we even is one even priced in?
A slight of a cut.
Well, that's what, you know, and the last time I was on, actually, they were talking about a cut. And I'm sitting there laughing, going, I don't think there's going to be a cut. I think if anything, there's nothing. There's no rate hike or no cut. But I still think we still think there's going to be one rate hike later this year.
Dom, today, at least you don't have, I mean, Boeing is an interesting one. It's rebounded a little bit now, so it's not hanging over the Dow. But this has been a phenomenal week anyway.
Well, so one of the things that I've been struggling with is trying to find out from a trader's perspective what the path of least resistance is, right? You're always trying to figure out where the general trend is. And right now, I got a mix of them saying it's to the upside until we get to 28.15 on the S&P. Oh, no, it's to the downside. We've gone too far, too fast. So the theme right now is trying to figure out where their leadership is in the marketplace. We have had a great start to the year so far. Yeah. You look at things like biotech or semiconductors or small cap stocks. Those are all good signs, but they're not at least good enough to get you right over this hump, a hump that we've stalled out at 3 or 4 times.
Right at this level, 28.15 is where we're having trouble.
And we had the big vote last night on Brexit, Wilf, which, as I understand it, now it means that a crashing out is unlikely. Is that true? Or tell us where we stand.
It is less likely, but it's still possible. So as you said, yesterday, Theresa May's own deal failed, again, this time by 149 votes. Today, we turn to a vote on whether or not MPs want a no-deal hard Brexit. That vote due in the next hour or so, and the firm expectation is that MPs don't want a hard no-deal Brexit. Assuming they reject no-deal Brexit, the focus turns tomorrow to a vote on whether to delay the vote beyond March 29, which would require, by the way, unanimous approval from the EU 27. And it's important to note that no-deal Brexit remains the default unless either the UK and the EU ratify a deal or the EU accepts a UK request for extension. But we'll get an indication of the fact that MPs don't want no deal this evening.
Why is the pound so strong this week, relatively speaking? Around 132 right now.
Because the vote to... The question is actually being asked, do MPs want no deal or not? That could have been taken off the table by Theresa May. She could have stubborned people out and sort of forced towards a no-deal Brexit, but the vote is actually happening, and it's happening tonight, and it's expected that the confirmation will be MPs don't want that.
So they rule it out. They rule it out and they say, okay, we get an
Politically.
extension. Okay.
They probably rule it out politically, but they don't do it legally. And again, 16 days are left. Even if we get a delay and we get an extension, say, no one expects it to be more than 3 months because the EU side doesn't want the UK to take part in European Parliament elections in June. Then we're back to where we were in January anyway.
Right.
Which is sort of 3 months left on the clock.
I would say this, too. As you talk about these trading levels that we've been looking at, especially for the pound, we've been stuck kind of between a $1.25 per pound on the downside over the past couple of months and a $1.33 on the upside. We are at the top end of that range right now. So you'll find a bunch of traders, investors, and strategists saying that the developments that will happen in the coming days and weeks may provide more downside catalysts for sterling because we are at the top end of that range.
The year-to-date range, as you say, about 126 to 133, top of that range. But what was the one-year average before Brexit?
I mean, yes, it was much higher.
We're talking 155 there. So we're still at Brexit levels, as it were. It's just finessing around the edges.